Hey, Chad. Good morning, everyone. My name is Tam. I work for Licensing Lending, and I'm here with Chad to talk about the FHA Groundup Construction Loan. Uh, so, if you missed the first episode, that we would talk about the FHA, how to get approval this um, for this episode, we'll be talking about the ground construction part that many people are asking for it. Uh, Chad, can you tell me a little bit about yourself, what you do, and how long you've been in the industry?
Yeah, so I'm with Life Changing Lending. I've been in the business over 3 years now. Um, I'm a traditional and non-traditional loan officer, so I can do anything from residential to commercial to land to pretty much anything you need real estate related wise. Um, touch on construction for FHA that is becoming more and more popular, which is a very very awesome program. So you have two different options. So if you own the land that you want to build on, one of the big things with FHA is obviously down payment. So if you own the land or you've got enough equity in the land, you only have to put 3.5% down. So that's a big deal for a lot of people that want to build their dream home but just don't have the money. So and not only that, you can use the equity that's in the land for the down payment. So you can truly not bring any money to the closing table. One of the other big things that's awesome about doing FHA opposed to conventional ground up construction is your ratios, right? So that's where a lot of people run into issues. And we've probably, everybody that's a loan officer has seen it over the last 2 years with the way interest rates are. Debt to income ratios are always tough because rates are so high. And people, not only that,
Correct.
home prices are still sky high. So with FHA, you can go up to about a 45 on the front if you got a good enough credit score for the payment, and they'll give you 55% plus on your back ratio, which it's really hard for people nowadays that have credit card bills. Their car payments are $1,000 a piece. Just normal everyday stuff that you need is getting more expensive. So car payments are getting higher, mortgage payments are getting higher, so it's getting harder for them to qualify. And not only that, on FHA, you can go down, below 600. That's another thing that's awesome about FHA Ground Up is you don't have to have perfect credit. And,
Okay.
the last few years has been hard on everybody. Everybody's maxing out their credit cards. It's affecting their
Correct.
scores, making it harder for you to qualify. So I would I would definitely if I had a client that was looking to do ground up and they could qualify for FHA, that'd be definitely the route I would suggest to all my clients.
So, since this is a ground up construction, does it has the same requirement, or is there some extra
There is
requirement
extra
pieces that
there's extra
people need to know?
requirements to it. The developer that's gonna build the house, they have to be approved, which is somewhat of a process, but most builders that build homes are licensed, they're easy to vet. So I would definitely suggest, if your distant friend owns a construction company and you want to use them, make sure that they have all their licensing needed because there is licenses that are needed to have as far as a contractor goes. Your father can't build your house just because he has construction background, right? They have to be vetted.
Mhm. So, if let's say I'm a builder for a living, can I use FHA to build my own house?
If you're a builder and you want to build your own house and use FHA, is that your question?
Yep, that's correct.
Yeah, no, they won't. They won't allow you to build your own house using an FHA loan. It has to be. uh, You'll have to subcontract it out to somebody.
Gotcha. And for this, how long does it usually take to get approval in terms of the borrower side?
If that's kind of a loaded question, but if the if the contractor has all the licenses needed, and not only that, you know, they've done business with the lender before, it's a pretty
Okay,
seamless process that you can do in 30 days as long as you have your plans and your contracts and everything set in place. But if they don't, it takes a little bit longer. It adds a couple weeks to the process. So it's typically about a 45-day turnaround.
got it. Can I? So for this program, can I use this program to buy the land as well, or I have to buy the land first and then do the construction loan after?
It's more set in place for you to have already owned the land. You can, but your down payment requirements are going to be higher.
Okay. Um. So so the guideline for FHA construction is pretty much the same as your regular FHA, correct?
Yeah, there. As far as the finance approval, it follows all the same FHA guidelines. The only thing that gets added to it is obviously the contractor that's going to be building the house. Those are the
Okay,
only things that add extra conditions to it.
got it. And how easy it is for someone to get approval from this?
I wouldn't say that it's that hard to get approved. I mean, obviously there's the financing part of it is as far as you as the client getting approved for an FHA loan. So you just have to follow all the guidelines that FHA has in place. So can't have lates within the last 60 days. Yeah, can't have any past delinquent government loans, student loans. Can't owe the IRS money that you're not paying them back. Those types of things. I mean, those are about the only things that make it difficult. FHA is fairly easy to qualify for. That's why a lot
Okay,
of people go that route.
gotcha. And what are some of the common issues that you see whenever you're trying to approve someone for a FHA construction?
People that have their student loans in deferment, that's a big thing.
Okay,
And people that owe large sums of money on student loans. That's been probably the hardest thing that we've been having is people have 60, 80,000 dollars worth of student loans that they have in deferment, have been having to make the payment, so they haven't really been allocated for it, and you have to take half a percent of that. So that starts to add up and adds into people's ratios. But the biggest thing I've seen is debt to income ratio problems.
okay. And for this program, is it like a two-step process, or is it a one-time closing?
It's a one-time closing, so it'll go from construction loan to perm after construction's done. And the other big thing is obviously getting permitting. There's draw systems that are in place to protect you, the consumer that's getting and the borrower that's getting the loan, so that general contractors don't try to get all the money up front and not finish the work and take the money and go to other projects. That they have a very stringent draw system as far as how they're going to allocate the money, how they're going to draw the money out, and it's all to protect the consumer or the borrower.
And so, so during the construction part, are the borrower required to pay principal too, or is just
No,
monthly interest
no,
payment based on
it
what they
only
draw?
be it only be interest on the money that you've drawn out. So if you draw 100,000, you're only going to pay interest on 100,000, and that doesn't matter if you got a $300,000 loan. You're only going to pay interest on what's being drawn and being paid out.
Got it. And when it's refinanced, whenever the construction is done, I'm guessing you guys will refinance them out into a longer term,
Hmm.
but based on the new value, correct?
Yeah, yeah, it's all going to be based off the ARV, what the property is going to be worth after they take into consideration the land that it sits on and the improvement to the land.
So if they do it correctly, is it possible for them to get some money out of that as well when they
Yeah, yeah. I
finish
mean,
the
if you
construction?
you build a $300,000 home, after it's all said and done, it's worth 600. You more than capable of being able to pull some cash out after it's all said and done.
Got it. Okay. So on the loan, how would you determine what's the maximum limit that they qualify for, and how does the process of getting that approved look like?
So we'll treat it just like a purchase. So
Okay.
we're going to take their overall debts, their income, what the mortgage payment's going to be when it's all completed and at the fixed rate, and we're going to qualify them based off of that. But that process only takes a couple days.
Okay. And during the draw process that you mentioned earlier, is there like a inspection fee, or that does already roll into the loan requirement?
Yeah, the inspection fees will be paid out as the draws get paid out because they are going to have to go out and inspect the work. Those draw fees, just depending on lender, they're going to range anywhere from 150 to $300 each time.
Okay.
But it's definitely well worth the money that you have to pay to make sure that the work's getting done correctly, because nothing would be worse than building a house and it having all kinds of problems.
Got it. Yeah. And is there a type requirement that, let's say for example, I want to build a barndominium. Can I use FHA constructions to build the house? I mean, build that property, or it's only work for like single family? Your standard single family or 4 unit.
No, yeah, you can use FHA all the way up to 4 unit. So if you wanted
What
to build
about
a
if I want to?
go ahead.
Sorry. What if I want to build like a barndominium? Does that qualify under
Yeah,
FHA construction?
yeah, as long as it's not a mobile home. I mean, you can even do a modular home.
Oh, cool. So, based on your past experience, is there any tips that you can give to the provider? I mean, to the borrowers to see how they can um, how they can apply for this program?
Yeah, I mean, my big tip would be definitely vet out and get more than 3 bids from contractors, because there's a lot of subcontractors. You definitely want to get with somebody that's an actual builder and knows the process as far as being able to be vetted by the lender so that they can be used to do the project. So you're not spinning your wheels, spending a bunch of money on blueprints and not being able to build. That'd be my biggest tip to that for that part of it.
Gotcha.
And
Uh,
the other tip would be definitely reach out to a lender before you start all that process so that they can walk you through it.
okay. And for those that never hire a builder, do we have like some kind of list that we can recommend them, or how
Yeah,
would they find a builder?
FHA even has a list of recommended.
Got it. Okay. Is there anything else that you like to add to uh, to the recording to see if that might help the borrowers?
Yeah, I mean, one big thing is make sure that you're very accurate as far as your contingency too, because they're going to add 10 to 25% contingency because people get into building homes and thinking, oh, it cost X amount, and then cost of wood or lumber goes up in the time frame that you're building your house, and all of a sudden, your budget shoots up 40 or 50 grand. Just make sure to be cognizant of that you are going to have some contingency money set aside for that,
Gotcha.
because there's always surprises when it comes to building a home.
That's for sure. um, on a monthly payment after you refinance into a long term, what are some of the items that including in the payment beside beside the tax, insurance, uh,
If if
HOA?
it go- if it goes from construction to perm and you don't refinance it, then
Mhm.
private mortgage insurance is gonna be applied to the loan, which is, depending on the loan amount, it can range anywhere from $90 to $350. So that's something to keep in mind. So
Gotcha.
it's definitely good to get out of an FHA construction loan after it's complete, because you're going to have enough equity in the property and you should be able to refinance the property into a conventional loan and not have to pay mortgage insurance. And the other big thing is obviously after the home is improved and there's an improvement on the property, your property taxes are going to go up substantially, because they're assessing their taxes based off of a piece of land that's worth anywhere from 50 grand to 150 grand, and you've been paying less than $1,000 a year in taxes. Well, now they're assessing it based off of a $400,000 property. So those are other things that definitely can keep in mind. Going from paying $100 a month in taxes to 600 is a big jump.
Okay. Awesome. Well, thank you so much for these wonderful tips, and thank you so much for your time. Uh,
Yeah.
for next week, we'll be talking about different topics, like different type of loan. For example, we can talk about VA, we can talk about USDA. So if you guys are watching this, if you have any questions or any topics that you want us to talk about, please leave in the comment, and either one of us will put up more information about it. But also stay tuned for the next episode where one of my friend will be talking about your, your traditional fix and flip loan, where he will be explaining his process that he go through and all the obstacle that he faced when he rehabbing the property. So again, thank you so much, Chad, for taking your time off your busy days. I know you have tons of work to do.
Well, I appreciate it, Tam. It's always fun.
Yes, sir. Yes, sir. Thank you so much, and have a wonderful day.
You too. Bye.
Bye bye.